investors across the world until now.
More than just business news, we're news for business people. Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. And I'm Shraddha Babla. First, the headlines. Asian indices open lower in early trade, with Japanese and Australian markets falling marginally. And Bitcoin plunges 18% after crossing $11,000 as a surge in traffic led to intermittent outages. While the Competition Commission has slapped a 52 crore penalty on BCCI for anti-competitive practices with respect to IPL media rights. And the government says errors by exporters while filing returns are the sole reason for the delay in grant of GST refunds. The Dow Jones Industrial Average closed at an all-time high on Wednesday as investors bet the US economy's momentum would continue. Abigail Doolittle is here to wrap all the action on the Wall Street.
Wednesday's Wall Street session brought about a very interesting divergence for the major averages. We had the Dow finishing higher by about 0.4%, putting in an all-time high, but the tech-heavy NASDAQ didn't even put in a record high on the session. In fact, finished down 1.4% or thereabouts. In fact, its worst day since August. The S&P 500 down slightly, a record high, though, earlier in the session. So again, we had the Dow and the S&P 500 doing fine, but the tech-heavy NASDAQ selling off. So as you can imagine, technology, that sector, the culprit, the FANG stocks down in a big way. Facebook, Amazon, Netflix, and Alphabet all down more than 2%. We also had a sell-off for the chip sector. The SOX, the Philadelphia Semiconductor Index, down more than 4%. Its worst day in quite some time. At one point on pace for its worst day since the Brexit. Behind that, Western Digital, Micron, among others. One analyst at Morgan Stanley saying that we might be seeing a particular type of peak in the semiconductor space, seeming to ignite fears there. We also had NVIDIA and AMD lower, as one analyst at Mizuho said that demand for cryptocurrency could be less in 2018. Chips from NVIDIA and AMD using cryptocurrency, so those shares down. And speaking of cryptocurrencies, Bitcoin, one of the biggest stories on the day. Bitcoin at one point taking out 10,000, 11,000, and then in the afternoon plunging 20% from that peak, perhaps on bubble fears. It wasn't all bad, though. We did have the banks finish sharply higher, up 1.7%, including Bank of America, Citigroup, JP Morgan, and some strategists are saying that behind the sell-off in tech and the rally in banks, a sector rotation into value stocks out of growth stocks. From New York, Abigail Doolittle, Bloomberg News.
Okay, let's also take a look at the Asian markets. They've opened lower in early trade. Let's go across to Bloomberg's Rosalind Chin for all those updates.
Well, as you were hearing, the tech stocks really selling off in the US, not doing too well there. And of course, that has been picked up here in the Asia region as well. So if you look at all the major benchmark indices here in Asia, they're mostly trading lower today. The MSCI Asia Pacific down about 0.5%. And really, yes, it's tech stocks again, which are not doing as well as others. So we have Keyence Corp down by 4.8%, Sony down by 2.3%, Tencent, which is just opened, down by more than 2%, Samsung down by more than 2%, and a lot of money is flowing out of the sort of tech part and going into financial. So we have, for example, in Japan, Mitsubishi UFJ Financial up by 2.6% and SMFG up by 2.4%. And of course, there is also some doubt creeping in as to how far, how long the market rally can sustain itself. And it looks like those doubts are now creeping in as we head towards the end of the year. Now, I just want to look at some data that we've had out there, because we did have some China manufacturing PMI, which was unexpected unexpectedly stronger, and that rose on demand for global products. It was a strong beat, affirmation of China's economic situation right now, but really not enough to buoy the markets there on a day like today, where the tech sell-off has really been weighing on markets. We've also had a rate decision from the Bank of Korea. Now, this is interesting because it's, again, the first time in 6 years that the Bank of Korea has hiked rates, and again, an affirmation of global growth, also Korea's economic growth as well, and its progress. However, again, not enough to buoy the Kospi today. That is falling 0.4%. It's raised its key interest rate to 1.5% from 1.25%. Underscores the confidence in the economy, but of course, inflation is near the bank's 2% target. The South Korean economy is projected to grow pretty fast this year, so those are bonuses for the South Korean economy. Could it be a turning point for the rest of Asia? Are we going to see other countries around the region also starting to look at raising their rates as well? It could be a key point right here. Back to you.
Thanks for bringing us all those updates, Rosaline. Of course, Nikkei has recovered slightly from the day's low. But to understand the trade setup back home in India, we have Pradeep Pandey and Agam Vakil who are waiting to tell us all that's happened in the futures and options space. Pradeep, first to you, what's on your list?
Well, looks like, today we'll open around 10,300 mark on Nifty. It's an eventful day because we have our own FNO expiry today, and then after that in the evening, 5:30, we'll get the GDP number for second quarter. Late evening by 9:30 or 10, we'll get to know what is the outcome of oil producers meeting. But to begin with, certain events in Asian markets that have really been bothering the Asian traders. If you look at it, Australian financial regulator has initiated an inquiry into banking. So there is an impact, some kind of a sentimental impact on Asian markets as well. Also, you look at the Chinese manufacturing PMI number, which is being awaited, and South Korea's interest rate decision, as our network correspondent also just mentioned a little while back. So if you look at the possibility of an opening at around 10,300, what happens thereafter is the big question. If you look at the option data at yesterday's close, it looked like that we were probably heading for an expiry between 10,350 and 10,450. But looking at the open today, and also the trend over last few days, traders believe that it's highly unlikely that we can close above 10,400. So we'll move in a range of 10,300 to 10,400 today. There could be some volatility because of so many data coming out and several triggers that market will be looking at. If you look at the FII and DII data yesterday, FIIs have sold yesterday, although they have remained net positive over this series. What is most interesting, if you look at the index number, that is the Nifty futures number, FIIs have bought around 1,200 crore rupees. But traders also believe that, it's coming on the eve of the expiry. It's always possible that some positions got squared off, and therefore you have a huge sell figure in cash and you have a huge buy figure in index. So that may not really give you an indication of a bullishness, a directional call in FII trade. If you look at commodities, oil has eased a bit, so a little bit of relief. Base metal have been consolidating for a while now, so that trade also remains as it is. There are not very strong cues, so to say, from commodity markets. To talk about a few sectors and stocks, actually what we have seen over the last few days is that trade is a lot news specific and stock specific. Focus remains more on mid cap and small cap, but two prominent sectors will be in focus today. One is banking, because SBI has raised the bulk deposit rates by around 1%. So there could be some reaction on the negative side in PSU banking in general, because analysts have been telling us that private banks are already offering higher rates when it comes to the bulk deposits, so there may not be that much impact on private banks. The other sector would be oil and gas, of course, ahead of that oil producers meeting in Vienna. There are large number of mid-cap and small-cap stocks, some companies like Mukta Arts, where numbers have come out, and we'll be keeping an eye on all these shares. Well, to find out more about the FNO, since this is the expiry day, let's move to Agam.
Right, Pradeep, as you said, it is expiry, and we have seen Nifty continue to consolidate around the levels of around 10,300, 10,400. Nothing much can be spoken for when it comes to the index itself, because it's closed flat. But when it comes to November futures, again, expected that we are seeing unwinding there. But when it comes to the December futures, naturally, we will see addition in terms of open interest. So on a net basis, we have seen an addition across series, and hence new positions have been taking place. And it's the same for the Nifty Bank as well. When you consider the Nifty November futures, the index itself has just moved down by as much as 0.2%, and we've seen very little change. And in terms of the Nifty Bank December futures too, again, it will see a substantial increase in comparison to what we've seen in November. That said, in terms of the wicks, well, again, continuing to move within that mark of 13 and 14, and I would continue to say that nothing has changed in the last 3 days. But the rollovers certainly have picked up, currently standing at 46%. It's largely in line with what we've seen in the previous 3 months, so we'll have to wait and watch whether or not this number changes substantially today, as it has over the past 4 or 5 expiries too. But what happened yesterday? We did see unwinding in the 10,600 call, and well, unwinding in the 10,100 put. Some of those are outside calls and puts that we've seen some amount of activity resuming. But moving in, there are a host of stocks that moved out of the F&O band. But before I go to that, let's consider escorts. Well, unwinding naturally seen out there, but we're looking at a lot of moves there, considering the stock moved up around as much as 2%. The other stock that I'm watching out for, of course, is DCB Bank. That declined by as much as 3.2%, so shorts building up there. Now I was mentioning about 7 to 8 stocks that have moved out of the band. That includes HDL, Wockhardt, and Jet Airways is also one of them, where we've seen some amount of activity. So we'll be watching out for that as we move into trade today, whether or not we do see volatility in the stocks that have moved out the F&O band, Shraddha.
Thanks for all those details, Agam. We will be watching out for those aspects. But let's also take a check on the rupee and bond market. And for that, we have Saloni Dhanuka, who is standing by. Saloni, the rupee, of course, continued to strengthen ahead of that crucial GDP data today.
Absolutely, Shraddha. So maintaining its upbeat trend for the third straight session, the rupee yesterday firmed up by another 10 paise to end at 64.32 levels against the dollar. Now traders remain cautious ahead of the release of GDP numbers today. It is expected to expand to 6.5% as compared to 5.7% seen last quarter, according to a Bloomberg survey. Now remember, the home currency has appreciated by a good 40 paise in the last 3 trading sessions. Now on the global front, Asian currencies were trading higher on optimism over US tax reform measures and Euro area economic growth, which largely overshadowed concerns about North Korea's latest missile launch. Now the dollar was little changed overall, despite gaining against most of its G10 peers, while the pound was the big winner against the greenback yesterday. It gained approximately 0.8% against the dollar on optimism over Brexit developments. Now coming back home, dollar rupee is trading at 64.45 levels in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Now moving on to bond market, 10-year benchmark yield ended steady at 7.03%, though it is still up 17 basis point in November, and rising for a 4th month on the back of concerns on higher bond supply, increasing inflation, and worries over widening budget deficit. And lastly, global funds increased their rupee debt holdings yesterday. They infused close to 30 crores according to NSDL data, Shraddha.
Thanks for that, Saloni. We will, of course, be watching out for the bond markets as well. But there was just no stopping to Bitcoin's surge until yesterday, when it fell by 18% after breaching the $11,000 mark. Bloomberg's Adam Hay has more in this report from Sydney.
Yeah, it's a bit of a wild day, wasn't it, in the US? The magnitude of the swing was large, but the time in which it happened, so a 25% kind of top to bottom move within the space of a few hours is concerning for some. And a lot of this is around some of the outages at the big exchanges. Coinbase was having some difficulties throughout the day, and also Gemini, one of the big exchanges, was having some issues. But let's remember that exchange outages are not unique to the Bitcoin trading environment. We see these in equity equity trading, very sophisticated markets like equities and fixed income, of course. In recent years, we've had flash crashes in both the treasuries markets and in US equity markets. So, Bitcoin investors shouldn't get too worried about this. But what the point about the outages today is that they coincided with a huge uptick in volume, and of course that is very worrying. If you can't get out during times of severe stress within the market, it begs very fundamental questions about the market structure and the ins and outs for investors, especially as we're moving into a phase now with Bitcoin where a larger institutional base starts to become apparent and participating in this market. So those key questions around confidence and stability, they're really the key takeaways from the massive Bitcoin moves today.
Well, some on the Wall Street are embracing the run with more than 100 hedge funds now dedicated to digital currencies. Others are issuing dire warnings, with Nobel Prize winner Joseph Stiglitz saying it ought to be outlawed as it doesn't serve any socially useful function. To listen in.
One of the main functions of government is to create currency, and Bitcoin is successful only because of its potential for circumvention, lack of oversight. So it seems to me it ought to be outlawed. It doesn't serve any socially useful function. We ought to just go back to what we always have had, and this is just a bubble, as several of your commentators have already pointed out. Let's make the whole system into one in which we use digital currency. It's not Bitcoin. It's a basically U.S. dollar based in the United States and Europe, euro and the pound, but it's using electronics rather than paper.
Moving on, while exporters cry foul over the delay in refunds of input credit, the Finance Ministry has hit back, saying that errors while filing returns are the sole reason for the delay. Nikunj Ori has more on that blame game in this report. Nikunj, over to you.
Refunds claimed by exporters for IGST paid during July to October is around 6,500 crore rupees, the government has said in a release. The quantum of refunds for unutilized credit on inputs is around 30 crore rupees, the government said. Remember, there were reports that stated that refunds and credit to exporters is to the tune of 50,000 crore rupees, and now the government has said that refunds pending as per the shipping bills given by exporters is only 6,500 crore rupees. The reason that the government has said that reason for delay in releasing of refunds and credits given to exporters is that there have been several errors made by exporters while claiming these refunds. Some of the errors that have been made by exporters are wrongly stating the shipping bill number in the returns and mismatch in invoice number provided by these exporters, and in some cases exporters have also wrongly mentioned their bank account numbers. That's the reason why there has been a delay in releasing of refunds and also a rejection of refunds in some cases. Now the government has advised exporters to immediately file returns seeking for IGST refunds so that the government can process them quickly and release refunds as soon as possible.
Thanks for that details, Nikunj. But the theme at this year's Global Entrepreneurship Summit was all about women empowerment. And my colleague Tamanna Inamdar caught up with the creators of India's first humanoid smart robot, which they have named Mitra. Now, Mitra is no ordinary robot. It is a story of entrepreneurship which started from a garage workshop in Bangalore to the Global Entrepreneurship Summit, where it welcomed Prime Minister Modi and US First Lady Ivanka Trump, kicking off the summit. Hear it from the inventors themselves.
We want to do something very innovative in India, and we have been thinking of starting a makerspace first, and then that grew up to a robot. So we all got an interest more to robot, and we built a small prototype, and we did it in a small maker space kind of, and that got a huge recognition, and that kicked us off, and we got that momentum. And luckily we got a very great team, and who worked day and night, and here we are in 1 year. Had a first molded prototype, everything done in our garage in Bangalore, and so we are very excited.
So this was introduced as the first made in India robot. What does Mitra do?
So Mitra robot is a smart humanoid robot for customer interaction. So essentially any place where there is a good deal of walk-ins on a daily basis, for example banks, hospitals, airports, museums, Mitra is now going to be the agent of interaction. For example, in a bank, it can open your bank account, it can help you with questions of the related to banks or interest rates, etc., etc. Also, the more innovative part of it is that it has autonomous navigation, meaning it completely understands the context, moves around on its own without bumping into people or objects. Now, along with which, it has contextual support, meaning it understands the context, and if you're in a bank, it has a lot of knowledge on the kind of applications that happen there and try to support you with the queries that you might have there.
Well, after a wait of 5 years, Bajaj Auto might just be a few weeks away from getting a chance to launch its quadricycle. Now, the Transport Ministry has issued the first official notification accepting quadricycles as a category of vehicles. Krishanu Mukherjee, who filed the report, has more details. Krishanu, is it a positive for Bajaj Auto?
Well, yes, it comes as a positive for Bajaj Auto indeed, considering it waited for 5 years to get this permit done with. The Road Ministry has finally gone ahead and issued a notification which finally mentions the word quadricycle. It is given the emission norms that a quadricycle needs to meet. Now, Bajaj Auto says it's ready with the product. When we contacted the managing director, Mr. Rajiv Bajaj, he responded via email saying that the vehicle had always met all the safety norms, but said of the European standards. He did not say that if the Qute, which is the name of the quadricycle, meets the norms specified as per the Indian government. So, while it may be a positive that quadricycles have been included as a category, this product will have to go through all the tests going ahead, which is one, the safety test, and two, the emission test, which were actually the points of concern when it came to the quadricycle, when people had said that it did not meet the frontal impact crash tests and also did pollute a lot. So while it is a positive, it remains to be seen what's going to go through, what's going to come through. Is the quadricycle that Bajaj Auto has made, is it going to go through all the tests? We're going to get to know in a few weeks from now.
Sure, we'll be watching out for that as well, Krishanu. But there are going to be a host of stocks which are likely to be the center of action in trade today. And we have Saloni Dhanuka, who's joining us again with that stock list that you must watch out for. Saloni.
So Shraddha, first up on earnings, we have Safari Industries. Now the company posted extremely good set of numbers with revenues up over 20%, while the net profit was up almost 3 times, and it stood around close to 3.5 crore for this quarter. Now while the operating margins expanded by a good 370 basis point to 9.4% for the quarter ended September. Now on the flip side, numbers from TBZ disappointed with revenues down about 27% at 326 crore versus 445 crore seen last year, while the net profit was down 90% at 1 crore as compared to 8 crore seen in the same quarter last year, and consequently the margins also was down 3.7% as compared to 5.2% seen last year. Now elsewhere, do keep an eye on SBI. Some negative reaction could be seen in the stock as it has increased its interest rate on bulk deposits of 1 crore and above by 100 basis point today, making the effective rate at 5.25%. Now elsewhere, Mahindra Finance is to raise approximately 1100 crore rupees by issuing 2.5 crore fresh equity shares at a price band of 422 rupees to Mahindra and Mahindra. Now also Times of India reported that Adani as well as Hindujas joined race for JP Infra as the insolvency process knocks out for Jaiprakash Associates. Now on bulk deals, we first have Action construction equipment. Now, GMO Emerging Domestic Opportunities Fund bought approximately 11 lakh shares in the company, constituting to almost 1% stake. Now, secondly, we have on Den Networks, Norges Bank bought 24 lakh shares, constituting to almost 1.2% at rupees 93 each. And lastly, interesting to note that for a small company like SIA Industries, SBI Mutual Fund, Goldman Sachs AMC, MOSL AMC, as well as Ashish Kacholia is to meet the company today. So some reaction could be seen in this stock, Shraddha.
Thanks for that, Saruni. Some interesting smaller or mid-cap names out there. But we'll also have Somit Sarkar, who's standing by with the big brokerage calls of the day. Somit, good morning, and initiating coverage on Century Ply.
Yeah, good morning, Shraddha. So first we have is Angel Broking initiating coverage on Century Plywood. Now they have initiated a buy rating with a target price of 400. Now strong brand visibility with wide distribution network led by higher ad spends will boost the company's revenue going forward, according to Angel Broking. Now the plywood sector is largely unorganized, and with GST implementation there will be a shift in trend towards the organized plywood sector, which would propel growth for the company. Now the Pradhan Mantri Awas Yojana, which aims to build around 1.2 crore houses by 2022, will also trigger demand for plywood and MDF, that is medium density fireboard, for the company. Now the capacity addition across segments would boost company's revenue and profitability, according to Angel Broking. Now they're expecting the company's revenue and net profit to grow at a compounded annual growth rate of 17% and 16% over FY17 to FY20. Second, we have is Goldman Sachs on Healthcare Global Enterprises. Now they have upgraded the stock to buy and have hiked the target price to 355. Now the company has delivered a quarterly EBITDA growth of 20% since listing. This consistent delivery in an underserved cancer market has led the brokerage gain more confidence on the stock, and on the back of this they have upgraded the stock to buy. Now they are saying that the company is expected to maintain its EBITDA growth pace based on the upcoming capacity and pricing power. Now they're expecting EBITDA to grow at a CAGR of 26% over FY17 to FY20. Pricing power, good management track record, capacity expansion will lead to margin dilution, and faster break-even timelines are the positives for the company.
Thank you, Somit, for all those details. But moving on, India's competition watchdog has found the Board of Control for Cricket in India, or the BCCI, guilty of abusing its dominant position and anti-competitive practices, and has imposed a fine of 52 crores. Shivani Saxena sums up the details in this report.
BCCI is an autonomous body that regulates cricket in India. It also organizes private commercial leagues like IPL. You would recall that in 2007, Indian Cricket League was proposed by Kapil Dev, but most cricket experts said that it failed because it didn't get any backing from BCCI. It is this conduct that will likely be impacted by CCI's order. This is because the competition watchdog has held that BCCI is the only player that can organize cricket leagues or similar events. Because as the regulator of this industry, BCCI itself frames the rules that permit only this organization to organize these leagues. The CCI noted that BCCI has abused its dominant position by preventing other commercial leagues to emerge, and that has only served the interest of BCCI and the bidders of IPL broadcasting rights. In conclusion, this regulator has directed BCCI to refrain from such anti-competitive behavior, but has left the doors open for the board to continue to frame the rules while granting approval for commercial leagues.
In fact, the IPL chairman Rajiv Shukla said that the board will study the CCI's order and could even challenge it if need be. Listen in.
Well, as far as Competition Commission's verdict is concerned, we will legally understand it, we will legally examine it, and if need be, then we will appeal against it to the court.
Well, there's lots to talk about over the course of the day, and you'll find all the live market action on Bloomberg Quint. There are also some stories that you should consider reading on the website, bloombergquint.com. Here they are. Pakistan's Prime Minister rejected US accusations that the country provides sanctuary to military groups and said the attacks in the region were originating across the border in Afghanistan. And the Federal Reserve Chair Janet Yellen, in what may be her final testimony to Congress as the head of the central bank, described as steadily strengthening picture for the US economy while downplaying the risk of financial instability. With that, it's a wrap on this edition of Daybreak. All you need to know is next. Stay tuned in to Bloomberg.